Well, good morning. Let's take a look at the managements that we have lined up for you. The first one is let's get into conversation with the management of Raymond. We have Mr. Gautam Maini, the MD and CEO of Raymond, joining us on the show. Mr. Maini, good morning and thank you so much for your time. And just taking a look at what your numbers are looking like, a good performance, a good move in revenue, EBITDA pattern across the board. Your EBITDA margins have also seen an uptick. Talk to us about what has led to this performance this time around and what specific drivers will ensure that this trajectory continues into FY27?
Morning. Thanks for having me on the show. So basically, building on the previous momentum, our performance this quarter continues to be anchored by both A&D precision technology divisions. So this reflects the deepening integration of Indian suppliers into the global high-tech value chain. We're seeing a sustained trend of domestic vendors transitioning into production of sophisticated subsystems and complex precision components, which has maintained a robust order pipeline from OEMs, Tier 1 and Tier 2 export partners. If I just move very quickly into the two segments that are actually part of the engineering part of Raymond. We look at the aerospace business, the revenue is up by 48.9% and the EBITDA is up by 39.4%. So it's been very robust for us. In 9 months as well, the revenue is up 33.6% and EBITDA is up 34.2%. The performance was basically anchored by two strategic factors where we've increased production specifically from leading aerospace OEMs and Tier 1s, but also done product portfolio expansions by almost making one new part every day. So that has helped us to take that forward. In the precision technology and auto components area, if you see, we've had also a 14.9% year-on-year growth and the EBITDA has grown 50.6% as well. In terms of the 9 months, it's grown by 12.2% and EBITDA has grown by 37.8%. So I must say that both our segments, with the last 18 months of hard efforts between integrating the erstwhile Raymond companies with the Maini Group companies, we are now seeing synergies play out and pan out both on top line and bottom line.
All right, that's good to know. Mr. Maini, morning, this is Shrishti also joining in. And help us understand, how is the company managing the inflationary pressures on some of your key materials, and what are the strategies in place to mitigate the global supply chain disruptions? If you can help us with some more details on that, and what's the company strategy?
So basically, most of the materials in both aerospace and in precision machining are pass-throughs. So if material costs go up, the customers give that to you. If it goes down, you need to pass it back. So in a sense, those the material costs going up and down actually don't play much of a role. What's important is to continue to focus on operational efficiencies, go by the leverage. The continuous growth brings those leverages, and the synergies in our businesses have helped us to not only get more business, but also get better bottom lines. In terms of being a little bit more specific, in terms of the auto and precision side, the hybrid business has helped us a lot because we've grown significantly in the European market. And as you know, hybrids in Europe are extremely successful. And this has helped us a lot. And I think the mother of all deals for the EU will now further improve sentiments in Europe, which is basically our largest export market. So going from there, it looks positive.
If you can just help us understand, what's the roadmap looking like for FY27 in terms of the order book build-up, and if you can share your current order book status as well, and what's the growth potential looking like?
So most of our businesses are long-term businesses. So both in the precision manufacturing side as well as the aerospace side, we normally have 5-year contracts. In aerospace, some of the contracts are also 10 years. So typically, you're looking at a 250% order book of your current year's estimates, and therefore you have a very healthy order book. As you're aware, in the aerospace industry, the backlogs are between 8 and 10 years, and therefore the order position is always very strong. What is key is to grow the aerospace business, to be able to make new products very quickly, because you have a high mix and low volume, and therefore companies that can make new products quickly, can ramp them up quickly, can have a sustained performance are the companies that will grow, and hopefully we are one of them, and it's showing in our results.
Mr. Maini, if you can help us with the exact number, if you have one right now with respect to your aerospace and defense business.
Well, I can give you a range because it keeps varying every day and every week. But in terms of a range, you would be looking at something like 800 to 1,000 crores as an order book at any given point of time, with a very healthy pipeline of RFQs which are also available. So that keeps growing on a daily basis. We make one new part a day for critical engine components, so you can appreciate that the position changes almost on a daily basis.
That going ahead in FY27, a triple-digit growth is likely?
No, I wouldn't say a triple-digit growth. That's pushing it too far. But I would say, we've been growing in a very good manner. So I would say in the aerospace business, between a 25 and a 35% growth can be anticipated. And in the auto components business, between a 12 and 50% growth is possible. So those are endeavors that we're doing. Banking on that, we've also, with public information there on Andhra, we're looking at expanding our facilities and investing there. Those factories would be ready by the end of 27 calendar year. So hopefully the momentum continues.
Okay, Mr. Maini, really nice to be speaking with you on your earnings, and we hope to catch up with you next quarter as well. Thank you so much for your time today.
Thank you very much.
Thanks so much. Okay, on that note, viewers, let's shift